What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for UnitedHealth Group Incorporated, ticker symbol UNH. This was a viewer's request, and thank you for your donation. I will first be going over what I see on the daily chart and finish the video off with the weekly chart. This video is for entertainment purposes only. Please trade at your own risk. So let's take a look at UNH. Well, it looks like everyone's probably wondering why there was a huge gap down created back here from that earnings report. That was released mid-April on the 17th before market open. So price was once upon a time trading at 584. It opened up right around the 480 level. So that's about $100 drop and then continues to trade down lower. So let's see if we could find any clues on the chart signaling if that was likely to occur and where is it likely to head next. So first things first, let's zoom out and you can see that price was trading near the all-time highs. So that's a resistance level. So you see that price cannot break through this level 605 several times in the past, and then now price comes right to it. So the earnings report could have broken price up higher, but in this case, sometimes earnings can be a wild card, add a lot of volatility, and it basically tricked a lot of traders. Everyone who's piling up on the breakout higher basically got taken out in one swoop. So just one wipe down, it took all this gain right over here. So that's what the market's doing. It's coming back for everyone's positions. Right? It's coming for the long positions who entered here, entered here, entered here, and basically it's wiping them out. It's hitting the stop losses. It's making them exit. If you buy and you're holding, how do you get out of your position? You have to sell, which adds fuel to the fire. So there's a lot of liquidity that was towards the downside. So basically price made gap down lower because we were near the all-time highs. We're also a little bit overextended, but who knows? It could have just as easily broken out higher. But again, it was near a technical resistance level with a little bit overextension from the EMA. I don't see how this is, something out of the ordinary. It was definitely larger than average in terms of a drop. But again, it is technically possible. It's on the chart. So overall price it even did break through this trend line. So that was a good sign for the bulls, but overall it did break down lower. So you have to go with what the market did. Now it looks like it's possibly making a measured leg down, already has done that. One leg down right here. You clone this arrow, target was right around 415 and no bounce at that level, which is not a good sign. And we're still trending down lower. So this is not a good sign. It tells me that this is real, right? This is a real aggressive selling, and something in the market or something about the stock traders are not liking, or long-term holders are not liking. So they know probably something you don't know, and that's illustrated on the price chart. That's the whole point of looking at a price chart. It gives you live data of what the market is thinking at that moment. So at this moment, or for the past several months now, or excuse me, several weeks, they have not been really liking the stock long term. So price is trending down lower, and not much else to say on the daily chart. We can look at the weekly chart for some price targets. But overall, daily chart is looking very strong towards the downside. Prices continue to sell off. Could see a dead cat bounce soon because of overextension. But who knows? That might just lead to more price rolling over. So let's take a look at the weekly chart. Consecutive red weeks in a row. 1, 2, 3, 4. Not a good sign. And let's look at some price targets. Right? Where is it headed? Where is the price going? Well, let's take a look at the weekly chart, and as you can see here, this looks like more of the range pattern, right around 450 support, resistance 553, or it could be a little bit higher. Let's say it's right about there, 601. That makes more sense. And now, since we're breaking out of the range on the bottom side, so we had a failed breakout here on the top. Now we're breaking on the bottom, but it's not reversing yet. So it looks like it's headed for a measure move lower of a range. So you can measure the range size. So that's one size right there. That's the size of the range. You go and clone the arrow. It's the same size, and you drag it over. This is targeting right around 295. So I would not be surprised to see price reach the 295 before it sees a significant bounce or reversal. Like obviously can see a smaller minor bounce before then. It can even reverse, but more likely than not, price is looking like it's targeting a range measure move lower, 295, and it does coincide with this previous high right over here and this breakout back here in 2020. So it looks like price is just coming back for this, all this gain right here. It looks like it's coming back for that liquidity as well. So it does make sense for two reasons. This is the breakout of 2020, which is a key level. And then that's where the range measuring target is at as well. So overall, it looks like price is targeting that level. So let's take a look at the monthly chart. One last chart I want to look at. And if we draw a trend line, it might also signal that level as well, or something even higher. So you draw a trend line across, and it looks like we could be approaching this trend line very shortly, 360s, before we see maybe a minor bounce. But if this trend line does not hold, which might not be likely, then we're going to see a breakdown lower towards the 296 level. So overall, it's looking pretty bearish, right? The stock is in a correction state from the high to low. So far, it's about 40%, almost 40%. To where it's going to go, about 50%. So it's not something crazy. I think the stock might have dropped more before. Let's take a look at that 2020 drop, high to low, about 40%. So what we have seen so far, but the trend is pretty mature. It's been going up for a long time now. So a bigger correction is due. That's just how the market works, right? If it makes a small move, you'll see a small correction. But as long as, the fractal gets bigger and bigger, you're going to see a bigger correction and then, bigger moves, something like this. So you'll see small corrections for small moves and then, big corrections for further big moves in the future, something like that. So we did see small corrections. Now we're seeing a big move. And eventually, maybe, just maybe, it will reverse higher from here into another long-term uptrend. But let's see one thing at a time. As right now, bears are control of the market. It looks like they're headed towards lower prices, 360, and then possibly, the 290s, and then we'll go from there. And then if you see aggressive buying, things can change. Let's see if we can back up. If we get back above the 450 level, I would basically ignore the downward targets. But as of right now, that's looking unlikely. So all I have for UNH on the daily weekly charts. This is Vee Trades, and thank you for your time.